Welcome everyone to week 9, and we're gonna go deeper into ranges and price. I did kind of go into the Asian range in the last week's video, but we're gonna go into more ranges as well as that one again and kind of see how they pair up with each other. So let's get into it. If you haven't already, click the subscribe button, thumbs up. Every week for this year, we're gonna have a new topic to cover for this 2024 mentorship. I think we're gonna go all the way to the end of the year. I've got I think 30 weeks planned out, so we could dive deeper and hit the full year. So week 9, let's get into it. So the importance of these ranges, well, they're gonna help us identify key areas in price. We're gonna have it as an extra confirmation to our setups, our rules, our strategy that we already have. This is gonna ultimately increase our probability of winning and taking profits. And it's also going to help us with better stop loss placement. So we have the Asian range liquidity. It's what we kind of started talking about in last week's. We have New York opening range, and that's going to be the first 30 minutes. We have opening range liquidity, which of those first 30 minutes, we're going to have a high and low marked off. We have our New York midnight open price, and then we have our New York opening price. So let's get into the charts. I have an indicator which we can add. Let me turn the sessions. Take this off. Turn this. We'll leave this on actually. We'll turn this off and we'll turn this off. All right. So let me add in. And let me turn. All right, cool. So because of daylight savings, my times are off a little bit by an hour. So let me go back to -5. And everything should be lined up. Okay, everything's lined up again. So we have our New York midnight opening price, and that's put out right here, right? So why is this important? We'll start with this, and that is because this is where like the new day starts for the markets, not the actual new day, but kind of price resets at this time, or so they say, right? So this is something I make note of. I don't keep this indicator on there, as you saw it was off, but it's a price area I do reference. And basically, if we're bullish for the day, like say we're gonna have our bias is we're going up to break this high. Anytime price goes below this line, that gives us a better price in theory to take it to that high, right? So look at silver bullet. It never went below, but right before, as well as that New York open, there was setups to be had here to take it up to the high, right? Now, if we go one more, we have that New York open price, and that's going to be right at 830. And if you look, if we're going below this and below the opening price, and our bias is still up here from our higher time frame down to this time frame, the 5-minute, that gives us a really good setup below both these prices. And look, it wicked. Next one wicked below and kept going up. Say you missed this, and that's when we look at that opening price range. So now we have this as our opening range. Let me change the color. It's good enough. Let me turn this the sessions off. That's what's messing us up. So opening range now, that's going to be within our first 30 minutes, our highs and lows. Look what formed right there. Say we can't get in below this because we were waiting, which for me, I'd be waiting. I would mark this up. Now we have this little fair value gap as an entry. And because we're going on a lower, we could just take it to this high right here and get out. We don't have to wait here, although it already took this out. I thought this was higher up here. Sorry. So yeah, we just take it to this high in this opening range. Guess what? If you were to take this, right? So this is the first 30 minutes. So now we would place the order down here if it did come back, which it did. My 5, there we go. And to this high is 5.25. So 1.05 and boom, we hit it. Now if I was doing my 10 handles, it would be a wild ride and I would honestly get scared, really scared. But we hit it eventually, and realistically, I wouldn't have waited for that just because of how price has been chopping around. I would have collected my 5, and then price pulled down and went back up right there. So I would be watching this low, and I would already have my stop loss below this low. Once this candle closed up here, I would have pulled this in, because if it does not break this high and reverses, I don't want to sit through all this. Just mentally, it's not worth it for me, even though we already went, right? So stop loss here, and we would have been out like 3 points. I think it was like 2.5. So we collected our 5 on one contract and 2.5 on the other. It's a win for the day. We didn't have to go through the mental stress of all this chopping around. And if you were wanting to get back in, look, that PM silver bullet plus that PM session after lunch. And you can see why we avoid this lunchtime, because sometimes it just grinds through all the stops, and it never went through this one. It got very close. It tapped the exact same price. And then it does what it wants after that, right? So let's go through one more example of everything and kind of tie it all together. So I'll just delete all my, I'll do my drawings over again. So we go back in time to here. Reason for that is I need these lines to power back up. Okay, let's turn on the sessions real quick. So we have this zone right here that we want to watch. Okay, I'm just going to leave it over here for reference. Let's put it on a different color. So we have this zone to reference. And we could see when we're going through London, London made it high, right? And if we pull back into this range, London made a high over here to that 75%. We broke through this low back up and then down again. Not saying we're in a downtrend, but on a lower time frame, taking a short would make sense. So keep that in mind. We have our Asian range. We have that leg range. We went above the Asian range, taking out the highs of the liquidity. We're above New York opening price. We're above New York morning price. So now let's zoom in and find that first 30-minute range. So we're going from 8:30 to 9, and we have a high up here and a low down here. Okay, just leave that there. So now we have this area, and we went through. Now we reconsider. Overall, we are in an uptrend, right? Up, down. You could say this is an up, down, up, down, up, down, and you could say, okay, we possibly reverse, but in this huge leg right here, if we measure it, Close enough. You could see we went below that 50% of the range. So now we're starting to tie everything together. And you could say, well, this was just a pullback of this big range. So no, we shouldn't look for shorts past this low. We could look within that range, but not below. So we have that 50%. Let's go in here. Let's look at this range now. Boom. We have another 50% of that leg. So our bias is looking for longs, right? We have our opening range. So once we go below the opening range, for me, I want a shift to get in. And there was no setup for me down here unless I was trying to, take a short below Asian range, right? I wouldn't go here. I would go below Asian range. But I'm not going to take that trade. Even though it played out, I'm not taking that. Look at the chop. So now we have a shift, and I would have missed this trade or this first setup at least because it happened in my no setup zone. So we move along. We're in the PM session now. So this candle, once it prints, we are now in a time where I would take a trade. So high up here or this fair value gap is a target we could hit. We have this marked off. Oh wait, no, that's the one we didn't take. We have this one marked off. Drag it out. We're below. Equities is at 9:30. So there's just an extra time of opening price. So we were kind of below that, breaking back above it. We have our shift. We have fair value gap. So everything is leading me to take a long. Get the price right. So take it long. And for me, so this would close. I'd be here. I would leave the order still here, even though it tapped a little bit. So we would have got filled on this candle right here. Got my 5 points. 10 max. And there we go. Would have taken profit at 5. Right there. Take one contract off. Let the second one go to 10. And if I am using 3, I would let it run, and it kept running, and it would have been a good trade. So that is how I use all these ranges, the time zones, opening price, and start to get that full story together. Because one thing on its own, like I said, this took out the low. If we were taking this range, could have gone shorts here, would have been taken out, right? Could have gone shorts here, would have had a good trade below these lows, but ultimately it was going to take out the high, not the low, because of the fact we are overall in an uptrend. And if you go out even further, the uptrend gets even more like we're grinding up, right? So when you have your analysis and one thing says no, like I said, it could have been a bigger retracement, and that could have been actually taking out a low. And we didn't let that one thing pull our mind to and just play that out for that day. No, we said, okay, this says this, but zooming out into higher time frames, we're going up. So this could have just been a pullback, a liquidity sweep. So let's go into our opening prices. Let's look at where we're at in the ranges compared to Asian session. Where's our high of the opening price range? And we start to add all these in, and we could see that we were indeed more confluence was to go for a buy in that program versus a sell. We just had that one low taken for saying sell, but everything else was saying buy. And so we could have scalped the sell and we're going to go into that later, where you could scalp against the overall trend. So you're not looking to take out lows, but for being just on the right side of the market more of the time, you want to just wait for it to reverse and then continue in with that direction of everything else is saying. So hope this has helped you. This is how we're going to start again. Just start tying everything in. So if you need to refresh, go back into the previous week videos. That's why I'm only doing one a week. Do the exercises, get in the chart, start adding everything up, and talk to yourself. That's the biggest thing that helped me, was talking to myself. Like, tell the story of the market to yourself, and when you could get yourself to buy in and like, yeah, that's what's going, that's how you know your bias, right? Once you buy into your story you're telling yourself, that's your bias. Whether you're right or wrong, that's your bias for the day. And you can keep talking to yourself, be like, well, actually, what happened was this, and we're still looking good here, here, and here. So that was just a little morning switch up, and we're actually looking for longs. And if you could buy yourself into that story, then you're going to start looking for longs the rest of the day. So that's how you get bias, and in time, you'll start to get comfortable with it. It's going to feel weird at first. You're going to want to be like, well, if it's that obvious, I'm just going to do the opposite, right? And the reason why it's becoming more obvious is because you're starting to know the story of price and what the market is doing, and you're starting to get in line with it and seeing things on a smaller time frame that do stack up to that bigger time frame. And then your bias will start coming easier and easier. And then after that, you got to worry about your execution. When are you going to get in too early, get stopped out? Did you miss the runs? And that's when we have our high traffic time frames, plus the kill zones, plus the silver bullets if you want to get even more down to a specific time in price. So start to add all these up and just tell yourself the story of the markets, buy into it, get your setup, follow the rules in your strategy, and see how it plays out. Do it over and over again in replay. If you don't have an account yet, do it forward, show up to the markets, and just play it out and see what happens. That way you could start collecting all this data. And we do have, if you go to our store down below where all our links are, we do have some sheets in Excel and Google Sheets where you could input your trades and collect the data, so you know what days you're more profitable. Were you taking longs or shorts? What's more profitable for you, right? And all that data will be calculated, and it's a full little dashboard you can do with your real trades as well as back testing, and start to understand your trading habits and see if your edge is indeed profitable. For me, my edge is profitable, but on certain days, I believe it's Thursday, most of my losses come on Thursday. So if I just take out Thursday, knowing that it doesn't align with my bias most of the time, my rules just don't work on that day, and I could see through months of trading that that's the day that's holding me back, I'm just not going to trade Thursdays, right? And maybe I could just back test that Thursday going forward, see if it was just like that season, and those Thursdays will be profitable for me in the long run. And that's how we keep collecting data and making the right decisions, not just, I feel like it's going to go down. It's gone up too much. Like, look, from November 23 to March 24, it's just going up. It has to sell off, right? Like, we got to come back down to this high, and maybe we do, but I'm not going to keep fighting that every day and say we're in a downtrend, we're crashing, we're going to go down to this low. I'm not going to fight that. Overall, we're grinding up, and we have pullbacks in that grinding up that makes sense, and we can play off of those. So hope this has helped you out. Click the subscribe button, thumbs up if you want to be notified when we launch every week. Hit that bell notification. One video a week, rest of the year, mentorship, and we're going to keep building off of each week. So do not miss a week, and rewatch weeks to make sure you are comfortable with what we talk about. So have a good one. Peace.